Hello, with me today I have Rob Sumner, Residential Investment Director at Sigma Capital. Hi Rob, great to see you.
Morning.
It's been a tough couple of years for UK house builders. Rising build costs, general inflation, higher interest rates have been forcing up mortgage costs, and now the threat of an economic downturn or recession in 2024. What's the market like right now for the broader house building sector?
I think you're absolutely correct. It'd be fair to say it's been a challenging few years in the marketplace. If you ally the likes of the loss of Help to Buy, which is obviously a very popular scheme and delivered an awful lot of volume for house builders. If you look at the state of the mortgage market at the moment, allied to house price growth, then counter that with things like the cost of living crisis. It really couldn't be more difficult. Interestingly, and I suppose paradoxically, we've still seen values grow, and we're still seeing values grow at the moment, and that's both rents and retail prices. Simply, it is tough. Costs have gone up, of that there's little doubt. But countering that has been the growth of values. I think one of the biggest challenges out there in the marketplace at the moment is land and planning. Certainly, planning, as I think broadly speaking, most people understand, planning as a system in the UK is pretty broken. And it takes an awfully long time to start with a greenfield or indeed, an ex-factory and turn it into something worthwhile into housing. So that in itself has been probably one of the biggest challenges. And also allied to land is the fact that land tends to be quite unresponsive to marketplaces. So if a landowner decides that actually the market's tailing off, they'll just decide not to sell and wait for the next cycle. So in short, it's been a challenging few years. But
looking ahead to 2024, with the prospect of a first cut in interest rates sometime in the next perhaps 6 to 9 months, is the future brighter for the retail property sector? Is this the bottom of the market? And is the cycle starting to turn in the sector's favour?
Look, I think any cut in interest rates is going to be a positive thing. In terms of house building, clearly the challenge is going to be that affordability piece. I mean, at the moment, the average house price to income ratio is 8 times. So that, by comparison to, say, the early 90s when it was about 2.5 to 3, is quite a leap for a lot of people. Equally, particularly pertinent to the rental sector, we have seen over 400,000 landlords leave the sector since 2016, according to CBRE. And that is creating greater upward pressure in the rental marketplace as well. So it's not just house sales, it's house rents as well. And so that affordability piece is something that really needs to be answered in some way, shape or form.
Okay, so what does the future hold for the UK house builders, do you think? We're always told they're not building enough houses to satisfy demand. Is the situation ever likely to change? And does it really matter for companies themselves or their shareholders?
Correct. The challenges are, as we've already outlined, and those appear unlikely to change at the moment, say land and planning, affordability, etc. That having been said, the house building industry is starting to change. It is starting to look at other revenue streams, and particularly working with a partnership model. Now, it's effectively 2 ways that house builders, myriad ways house builders can work, but essentially 2 funding sort of mechanisms there. Obviously have their own funding, they speculatively find land, get planning, build it at a pace of sale, which may be 1 a week, 1.5 a week in better times, and then take a margin on the sale price. The difference between what it cost to get to that point and obviously what they sold it for, which is great. But when you've got all of the pressures that the industry is currently facing, you need to look at other ways to deliver that housing into the marketplace, because you've got to keep your supply chain relevant and efficient. And equally, you've got a big headcount to actually create these houses. You've got to keep those guys and ladies employed as well. So the partnership business is something that is particularly pertinent to us. And really what that means is that we can buy but fund the delivery of housing. So rather than taking a larger margin on the retail part of the business, what we do is we will fund each month house builders to deliver a particular scheme for us. We want them to build it at a pace of build rather than at a pace of sale, so it'll be much quicker. The margin they will receive at the other end of that process isn't going to be the same as the margin that they would get on the speculative retail stock, but their return on capital advantages are significant. And we're already starting to see more house builders talk about doing that. Once upon a time, it was the preserve of a few specialists, but now increasingly we can see those partnership activities growing, and in some of the major house builders in the UK.
Okay, Rob Sumner, Residential Investment Director at Sigma Capital. Thanks very much for joining me today.
It's been a great pleasure.